few years, 90% of the world's demand will be from outside Europe. So this week, Real Economy goes exploring the world of trade and deals with our largest and emerging partners across the world. On the show, we'll talk about why it's so important for Europe's economic future to negotiate strong deals with our trading partners. We'll analyze how those relationships have matured and changed. And then we'll take a peek at how we in Europe are viewed by those very same trading partners that we want agreements with. Now, if you're wondering why we're talking about global trade, think about the fact that if Europe closes on all its free trade agreement talks tomorrow, it means it could potentially add 275 billion euros to the EU's GDP. Now, that's like adding a country the size of Austria or Denmark to the economy. It also means an additional 2.2 million jobs here in Europe. So let's get a quick crash course on what exactly is a free trade agreement.
A free trade agreement is designed to reduce trade barriers between countries. Now, barriers usually protect local markets and industries and typically come in the form of tariffs, taxes on, say, the import of trucks and commercial vans into the US. But a barrier isn't always a tax. Regulatory restrictions, intellectual property rights, competition policies can also act as so-called non-tariff barriers. A free trade agreement aims to reduce or eliminate both kinds of barriers, making it easier and cheaper for countries signed up to the deal to trade with one another. For you and me, the customers, freer trade can mean more products on the shelves, more choice and lower prices. But there's a downside. Relations are not always equal between large and small economies. The small economy may be forced to make too many concessions. The large may not compromise as much on its trade barriers.
FTAs become really important during difficult economic times because the natural knee-jerk reaction for countries is to become protectionist. Trade restrictions went up in 2013, even compared to 2012. But remember, Europe already has deals in place with 50 countries from Central and South America to Africa to Asia. We're also talking to China, and the transatlantic trade deal with the United States is being hotly debated. So Chiara Reid set off to find out how our trading relationships are changing with time.
If you haven't heard of Drew Design before, you will almost certainly have seen this. This bundle of drawers launched this Dutch company into the world of interior design in the 90s. Drew's incredible designs have gone global, but to get there, the company has had to navigate a labyrinth of individual trade agreements for each country it exports to.
At the moment, we export quite a bit to the US. Quite often, there's also a difference in terms of the technical elements. For example, with the lighting, you need to go for, in Europe, you go for a CE certification, and in the US, you have to go for UL listings. Barriers are hard to get by as a small company, and for us, it's fine to deal with the strictest regulations which are out there, as long as they're unified worldwide.
To that end, the Transatlantic Trade and Investment Partnership aims to free up trade between Europe and the States. It is on the table, but negotiators are having to make a choice, each side weighing up which of their industry to protect from competition from abroad. The stakes are high because a successful FTA could be invaluable.
I think if you look at the relationship, transatlantic trade, it's pretty large. I mean, you've got something like 2 billion euros a day transatlantic trade going back and forwards. It supports about 15 million jobs on both sides of the Atlantic. It makes a very large contribution to our GDP in this continent and in North America.
Much of that 2 billion euros of trade per day goes through the port of Rotterdam, Europe's biggest hub for import-export. America and the EU make up the world's largest trading partnership, accounting for half of the global GDP and 1/3 of trade. Tariffs are below 3%, but non-tariff barriers abound. These barriers have to do with public health, the environment and regulations on issues governments are not keen to compromise on.
Trade agreements are very important because they always rise the amounts, that's one, and they lower the costs, that's two. So for us as a board, especially when we're concentrated on large amounts, we're very happy with trade arrangements.
Joining us is Jean-Guy Carrier. He is Secretary General of the International Chamber of Commerce and previously was, interestingly, with the World Trade Organization. Multilateral agreements don't have much teeth right now. Is it a better way to do it in terms of having bilateral trade agreements?
Business people always like a multilateral approach better than a bilateral because the problem with bilateral, the negative side, is there's over 400 of those kinds of agreements, regional and bilateral agreements, is that the rules change in every market. And so if you're a small and medium-sized company that wants to trade and you don't have a legal department, sometimes it's a very daunting proposition. What happens with multilateral agreements is that the same rules apply to everybody. It's nice. You sail around the world, you do business around the world, and you know pretty well, it's always going to be the same conditions. And so you can adapt to them.
But it's going to take a while for that to actually be in full effect across the board. Where, as a business, do people see a compromise?
There are, coming out to be some compromises on standards. It's some very sensible measures that have some of them to do with health standards. If you're going to be packing and shipping fruit from Nigeria, you have to respect certain ways of washing that fruit, of how you put it into crates, how you ship it. So those kinds of rules are used by countries as a kind of protectionist measure. They sort of exaggerate the value of those, and they block a lot of countries, especially poor ones, from selling into their markets using those kinds of things. There's some glimmer that we can begin to harmonize those kinds of rules, so that if there's a rule for how you bring a tomato into a European country, it will resemble the rule for bringing that tomato into Canada or into the US or into Mexico.
Achingly slow progress at the WTO level means that bilateral agreements become really important, especially with fast-growing emerging markets. Take technology, for example. We've been steadily losing market share in the high-tech industry in Europe and the US to Asia. So not only are they key for us as a target market, but we have to attract companies from emerging markets to Europe. So Gianni Maggi analyzes how we are viewed by our potential emerging partners and what they bring to the table.
The French market for IT services is the third largest in Europe after the UK and Germany. At La Défense in Paris, there are major multinationals operating in high-tech industries based in different countries around the world, such as India. Over the past decade, Indian companies have invested the equivalent of 43 billion euros in Europe. Two-thirds relate to mergers and acquisitions of existing companies, the rest to launching new activities. Tata Consultancy Services is an Indian IT services company. Last year, it acquired the French firm Alti. Tata boosted Alti's workforce and now boasts 51% growth in Europe. A well-drawn-up FTA could expand Europe's role in the group.
So the relationship is certainly growing and on a good track. But what a free trade agreement will do is it'll give a boost to this relationship. Experts predict that if an FTA is signed, it could potentially double trade within 2 years, from the 80 billion euro levels to 150 billion euros.
The European Union's been hashing out a free trade agreement with India for the best part of 7 years, but there are sticking points over agriculture, labour standards and generic drugs.
FTAs are not easy. Any FTA negotiator will tell you that it takes a long time to achieve. In most FTAs, the first 90-95% of things are easy to agree with, which is where this FTA is. But the last 5% is what takes time and can often derail the process.
Alongside the IT business, Indian pharmaceuticals and car makers are eyeing the great potential of the European market.
Indian companies, as all multinational companies, they expect returns. They know investment in Europe is safe bet. The business model that India has been able to develop for the last couple of years, it very much matches with the sustainable business model that Europe has developed.
Still with us is Jean-Guy Carrier, Secretary General of the ICC. How do you strike a balance, the right balance, between ambition and reality, say, for example, with countries in these emerging markets?
part of the enthusiasm about new trade agreements is for mega regional agreements. These are good. I mean, these are, by business people are seen as a positive development. The problem is they leave out most of the countries of the world and leave them outside of the benefits of these kinds of agreements. But you've got to get some movement multilaterally that compensates also and keeps basically the poor countries, the more developed economies, also benefiting from trade openings. And if you don't do that, you're going to create extreme inequality across the world economy that doesn't have to be.
How do you convince people in Europe that global trade is good for you?
Yes.
Or is that a one-sided argument?
There is still an entrenched belief by a lot of people, and it's really not just Europe, that somehow global trade steals jobs from me and sends them to poor countries, and that's a kind of belief that frankly doesn't stand up to scrutiny. It has been a belief that has not been denied by politicians. Trade creates jobs. And the reverse, the protectionist tendencies that have been dominant for the last few years, do the opposite. And in countries such as this one that we're standing in right now in France, where they have export champions like nowhere else on earth. That is what generates jobs in France. If France is selling and Germany are selling cars into China, and they are, it's a thriving, booming market for cars, and suddenly they impose constraints on solar panels coming into France or some other Chinese products, necessarily you get a reaction and you start blocking up the possibilities that create jobs.
The sheer size and scale of global trade is awe-inspiring, and it's expected to grow 4 to 4.5% this year, but we know protectionism is on the rise. But if it's done right, global trade has the ability to create jobs and wealth for individuals like you and I across the world. Until next time, thanks for watching.